cool things that's happened in finance over the last 15 years is this whole sector of the financial world called the non-bank banks, right? Non-bank banks, gosh, it sounds like such a simple concept, but it's basically organizations that are willing to lend capital, but don't have the same structural limitations, regulatory limitations, and maybe even return limitations that traditional bank lenders have. And so you're a non-bank bank. I'm a non-bank bank. We do things differently. We operate differently. We maybe even desire to invest in each other's businesses because of our different levels of expertise. But the non-bank bank world, and if you're a business owner who's listening to this, just Googles the phrase non-bank bank or asset-backed lender, or they will find hundreds of entities, even geographically convenient to them, that they make your life just miserable enough that you continue to need them for capital, but not so miserable that you quit because they just bought your business. And so I learned categorically, and again, there's always exceptions to it, I learned categorically that when institutions get involved in deploying capital into the private equity space by the private equity managers, you basically are giving up your life as you know it. You're giving up control of your business to run your business the way you want to because you've sacrificed it, and even if you've decided consciously and voluntarily to make that trade, that you're going to give up control. And no private equity firm, even if they don't take a majority stake in your business, is going to say, hey, we're hands-off minority investors, we're going to let you do what you want to do, because they have plans to eventually own all of your business. What I learned in the institutional equities business is that it's not a friendly space most of the time. So if you're thinking about taking in institutional private equity, you'd better make sure that you go through an extended, as long as you can anyway, an extended dating period. Because if you're going to get married to that organization, you want to know all the good and all the bad.
What's the most underrated skill in your industry?
I think, well, these themes are probably going to blend together, but the most underrated skill is admitting what you don't know. Being able to say to somebody, I'm the CEO of my little business, right? I go into meetings and people think I'm going to have the answers all the time. And I always point at other people around the table. I say, you know more about this than I do. You know more about this part of this than I did, and you know more. So tell me about what your recommendation would be and what action plan you would put in place. And having the courage and sometimes the humility to ask other people for answers, because sometimes your answer is a synthesis of all the other answers, but you have to have the humility to ask others. Mm-hmm. And so listening, which I'm not good at, my wife reminds me of that all the time, and having the humility to hear others' inputs before you synthesize an answer or a solution.
Welcome, everybody, to the next episode of the Construction MF'ers podcast. I am Scott Peper, CEO and founder of Mobilization Funding. And today I have a great guest with me. I always say we have a great guest, and today we really do. A good personal friend of mine. His name is Dean Tanella, the president and founder of HarborLight Holdings. It is a private family office style investment firm. And Dean is also the co-chairman of Elevate Tampa Bay, which is a very cool charity, one we support here at MF, and I support personally, and I'm interested to show you about both of those. But first and foremost, Dean has an extensive background in finance, a lot of traditional finance, and now an even more extensive one in alternative finance, doing all different types of deals with all different kinds of people. Today, I'm going to let Dean talk to you all about how you can get financing, the type of financing, what lenders think about, what banks think about, and the creativity around all that. So, Dean, welcome.
Thanks, Scott. Thanks for having me.
And I'm grateful for your friendship too, buddy. Thank you very much for that. I didn't mention that, but you've been a great mentor to me in a lot of ways personally, and things I've instilled nuggets into my own soul that I use every day, and that people on our podcast probably would never know, but watching this, there's things I do and say that you absolutely have control over, and certainly with our customer base. So thank you.
Thanks, Scott.
I appreciate it.
I appreciate it. Back at you.
Well, let's talk about your background first with Raymond James and coming from a small town and playing sports and making your trip. I think your journey to HarborLight is very cool, but I want to lay the foundation for that a little bit. So tell me a little bit how you got into finance and why. You could have done a lot of things coming out of school, especially that little tiny school in New Jersey that you went to.
I'll start off by saying that I believe wholeheartedly that nothing happens by accident. There are very few, if any, coincidences in life. And I was able to get admitted to a private high school that my parents couldn't afford to send me to. And I only was able to get there because I won a scholarship. I sat down with 300 other students and was one of 5 people that received a scholarship. And I didn't even know who was donating these scholarships, but it turns out that my entire 4-year high school education at this very, I don't want to call it prestigious, but very impactful academic institution up in northern New Jersey were donated by the founder of the Vanguard Group, which was at that time just a nascent little mutual fund organization, but has turned into a juggernaut with trillions of dollars under management.
Yeah, it's one of the biggest.
And one of the biggest. I think it and BlackRock probably vie all the time for the number 1 position in mutual fund management, index fund management as well, now institutional management as well. But to make a long story short, at that time in my life, I thought that was a really cool thing to happen, and I received this wonderful token of generosity from a gentleman who was hoping to educate young people at a place called Blair Academy, and I wrote letters to him for 4 years and thanking him for his generosity, and little did I know at the time, and didn't know at the time, that he was an impactful player in the financial services industry, and that he would ask me to intern for him after high school and before college, asking me to take a year off at a time in my life when I was going to accelerate the plan, be done with college and graduate school by the time I was 21, and be out in the world with a couple different careers. And his name is Jack Bogle, and he changed my life forever, because not only did I get a great education, but I learned the finance business through him and took him up on his offer reluctly, because I needed to be convinced that I was not going to go to Tulane to play baseball. I was going to take a year off and postpone that. And I learned a lot about the mutual fund industry at the ripe age of 18 and investing concepts. And most importantly, about character concepts, about what Jack Bogle embraced to become the legend that he has been in the mutual fund business. So, make a long story short, after a year of interning with him and carrying his bags around the country at a time when he was being laughed off of stages because of something very unpopular he was pioneering called no-load mutual funds.
Yeah.
Nobody was doing no-load mutual funds, because who would sell a no-load mutual fund when there's no commission, which is what a load is? And he was pioneering this concept, telling people that, look, your clients are going to buy no-load mutual funds, whether you like it or not. And they're going to disintermediate. They're going to take their capital away from you to go to these no-load mutual funds unless you embrace the concept of low fees or no fees in some of the parts of the assets you have under your stewardship. And as he was being booed off of stages, and I was carrying his bags to the next airplane and the next train station, I'd say, Mr. Bogle, I'm not sure this is going that well, and that maybe you're doing something that's pretty unpopular. I don't think you're going to be the next president of the Investment Company Institute of America if you keep this up. And before long, his assets under management went from a quote-unquote lousy $1 billion to about $10 billion. About half of that, maybe $5 billion, came in during the year I was there. And make a long story short, it's turned into, within a couple of years, he was celebrating not $1 billion increments of assets coming in, but $10 billion of assets coming in every few months. And by that point, the celebrations got too frequent, so they had to turn it over to $100 billion asset celebrations, because they turned into a $1 trillion organization within 10 years after that.
Wow.
My point is that he had courage, he had vision, he had stamina, and he didn't really care what the public felt and thought. He had conviction about what he was doing, and what he was doing was right for the investors. Not right for his shareholders, not right for his own pocket. It was right because investors have a right to get great products at reasonable, if not below average costs. And he was educating the financial public and then eventually the general public about what that meant. So I started off by saying, Scott, nothing happens by accident, but I learned the investment business through the eyes of a man who was committed to excellence and servicing people and meeting them at their greatest need, which is to be responsible stewards over their savings so they could have a reasonable retirement. And that pretty much guided my choices and decisions over the next 20 years of my kind of career selection and what I was willing to do. And it redirected my life. I say he changed my life. He educated me about the investment business, but he had also, before that, even had donated the capital that got me, a 4-year high school education, at an institution that was, way better than the public schools in the area that I grew up in. Mm-hmm. And so that type of generosity also impacted, later in my life about what I was desiring to do with my capital as far as my giving plans and donation plans. And from there I went off. I ended up redirecting my college, and I went off to an Ivy League school. I played baseball and soccer at Princeton because Jack Bogle asked me to aim higher and think of myself in a different light because I had capabilities in his eyes that were greater than just going off to college to play baseball and having a relatively mediocre commercial career. That's awesome. And so I guess the whole point is that nothing happens by accident. My standards of excellence got redefined, above and beyond just my own personal goals. He helped me think more globally about how I could impact, people and maybe even an industry and do things that may not be that popular that are still the right thing to do.
What I think is amazing about that is what a gift at 18 to learn how doing lead and do what's best for the people that you're trying to serve.
Amen.
Unapologetically.
Correct.
And let that intent drive you. I didn't learn that until, especially in our business or in my own personal life, to really be guided by that. And that doesn't mean I was the antithesis of it, right. But it's just specifically to Mobilization Funding. We've been around 11 years now. Our focus to just do what's absolutely best for our customer first and let the rest shake out from there, that didn't exist until 4 years ago. So we spent maybe the first 6 or 7 years literally trying to do what's best for the business, what's best for the money, what's best for the return, what's best for the balance sheet, the income statement. And those things are important to a business, but not first.
Right.
And if you do what's best for your customer, who you're trying to serve first, the rest of those things become incredibly easy to do. But it is very hard to take that first step. And at 18, to be able to learn that and see it while someone's getting booed, it is really an awesome gift.
It is. And I mean, when you proceed in the way you just described, you never have to look over your shoulder. You never live with regret. Mm-hmm. Doesn't mean everything works out.
Yeah, it doesn't.
But you never have to live with regret.
Right.
But if you do the opposite and you have some other goal or agenda that becomes first other than serving your customer best, then you always wonder if you could have or should have, or maybe if you had turned left instead of right, or if you hadn't been so selfish in your agenda, maybe the outcomes would have been different for all parties involved. You guess. You are constantly doubting maybe your own even judgment system. But when you do what's right from the beginning, I know it sounds corny, but when you do what's right from the beginning, even if it doesn't work out, you can never have self-condemnation because you believe that you were following your heart to do what was right.
That's right. And I think another way it's been said to me before is the difference between being transactional only versus what's best for the lifetime value of a relationship, another human, that relationship. What are they? What can they be for you, to you? What can you be for them? Right. And if you think about just how can I extract as much out of this person in this one interaction for my benefit, and it sounds horrible when someone says that, but that's ultimately what you do in a transaction relationship.
Sure.
Then there's really nothing left after that. Doesn't mean you don't close the sale. It just means is that person really going to want to do that ever again? Probably not. And so you're just starting over and over again.
Right.
I think that's really cool. So you come out of Princeton and then you ultimately land at Raymond James.
Yeah. So during one of the summers, I was able to get some exposure to the investment banking industry. And I really fell in love with capital markets, broadly speaking, as opposed to just what Jack Bogle had exposed me to, which was the mutual fund industry, which is a significant part of obviously the financial landscape. But I learned the investment banking side of business a little bit, got tastes of it during a couple summers, and went to work for what was then a mainline major investment banking firm, a top 10 investment banking firm coming out of school, and did that for a couple of years on Wall Street, and went off to business school after a couple of years of doing that, and came out of the industry and went right back. Came out of business school and went right back into the investment banking industry and the capital markets business in Boston, which I had discovered during business school, and that also changed my life, because living in Manhattan was never a desire of mine. But when you find Boston and you realize you can work in a beautiful financial community, it's very elegant and sophisticated, and not have to deal with what I consider to be the rat race of Manhattan. It was the best of all worlds, and Boston was where I met my beautiful wife, and we got married there in 1990, and I moved to Florida in 1994 when a regional investment banking firm that's now well known called Raymond James came calling and asked me to run what's called the institutional equities business. So at the ripe age of 34 years old, I moved to Florida 30 years before I ever thought I'd consider doing so. And
not for retirement.
Not for retirement. Found myself down here, and Raymond James did a wonderful job empowering the capital markets team to build that side of the business as opposed to the retail investing side of the business. I worked in the institutional business and learned a great deal about taking companies public and providing proper levels of financing and structures of financings, and we did 300 public offerings in my 5 years there, and it was in 20 different industries. And so I learned a lot about a lot, but like a lot of people say, instead of being a mile deep, it's an inch deep and a mile wide, because I learned a lot about a lot of industries and how different economic structures and financial structures work for different types of businesses that are generating different types of cash flow.
That's cool. So in our world, a lot of the audience listening to our podcast, they're business owners. There's been a big buzz around private equity getting into the construction world, or other businesses that are aggregating companies together and then ultimately selling them. And a lot of these cool buzzwords people know about and hear about. And also figuring out what is the right level of financing. Is a private equity group the right one? Should I bring on a partner? Should I bring on debt? How do I make these decisions? Maybe from your side, looking at these businesses and analyzing which ones of those 300, if you took 300 public, you probably looked at 3,000, right?
Sure.
And so if in others, you might have found different sources of debt for other types of capital. Cash flow in construction is critical. It's a very cash flow intensive business.
Sure.
And it also has a lack of capital access to it. So how can a construction company best position themselves to analyze what is the best form of debt for them? Should they look at a private equity company? Should they go into an investment bank? What is the right way for them to get their framework together so they can be best positioned to have as many options as possible?
Man, that's a complicated question, and there are no simple answers, right? There's lots of different ways things can get done. The first thing I'll say is one of the things I learned in the formal investment banking business is that there's a lot of unspoken things that the average borrower or average business owner doesn't know that happen in the investment banking world, right? So you asked me about private equity, for example. So private equity is a wonderful business. It's a fancy $2 term for owning a business, right? So you and I, we own businesses, but we might want to buy another business, so we can pay out cash to buy that business, or we can take in investors to help us buy those businesses. But it's just a fancy term for wanting to own businesses. But when institutions get involved in buying businesses, they will give you a great, and there are always exceptions to what I'm about to say, but they will give you a great pitch on why your life under their leadership and tutelage and ownership is going to be even better, and how you're going to make more money and all the benefits that come with their wisdom and experience. But the fact is, they really only care about one thing. They care about making money for their investors, so they can make 20% of that, their carry, their profit slice, off the top of that principal they make for their investors. So the goal, by the way, they would be a failed business if that wasn't their goal, right? So you can't admonish them for having that goal. But their goal is not to have your life be made better and easier. Their goal is to get as much as they can to squeeze juice out of a turnip and make sure that they make your life just miserable enough that you continue to need them for capital, but not so miserable that you quit because they just bought your business. And so I learned categorically, and again, there's always exceptions to it, I learned categorically that when institutions get involved in deploying capital into the private equity space by the private equity managers, you basically are giving up your life as you know it. You're giving up control of your business. You're giving up the freedom to run your business the way you want to, because you've sacrificed it, and even if you've decided consciously and voluntarily to make that trade, that you're going to give up control. And no private equity firm, even if they don't take a majority stake in your business, is going to say, hey, we're hands-off minority investors. We're going to let you do what you want to do, because they have plans to eventually own all of your business. So what I learned in the institutional equities business is that it's not a friendly space most of the time. So if you're thinking about taking in institutional private equity, you'd better make sure that you go through an extended, as long as you can anyway, an extended dating period. Because if you're going to get married to that organization, you want to know all the good and all the bad. So you need to ask questions. Even though you're being pursued and you're asking them to invest and you need the capital, which you wouldn't be going through that whole dance, you need to have the guts and the confidence to ask questions like, tell me 3 firms that love being targets of your investment capital over the last 3 years. Great, you write those down, you call those people up, you hear what their story is, and then you ask, okay, and now give me 5 firms that absolutely hate doing business with you. Okay, and when they tell you that they can't think of any because everybody loves doing business with you, you need to run, because that's a lie. Right? So you find the people who have had a less than perfect experience, and you find out, and by the way, it doesn't mean you don't do what you're about to sign up for, but at least you go in with your eyes open, right? This is how they treat people. This is what happens when times go well. This is what happens when times don't go well. This is the time when I had less control than I thought I had, even though I didn't give up 50% of my business. You need to know the player you're dealing with, and again, I find myself thinking about Jack Bogle, my first boss in the mutual fund business, right? He wrote a book. He's written 15 books, but one of the books he wrote is called Character Counts. And I know that's a simple phrase, but it's a great book. And the reason that character counts, as we all know, character counts, and everybody who might be listening today is shaking their heads, of course, character counts. Tell me something I don't know, right?
How do you know that?
Yeah, how do you know? So my point is, in this dance, to receive capital that you badly need to grow your business and to go over this hurdle, you have to pursue with intentionality a viable assessment of the character of the people you're dealing with and the character of the organization overall, because it has a reputation based on the activities that they've been proliferating over the last 10 years, right? So that's why you have to have the guts, even though you're asking them to invest and you're basically begging them for capital, you have to have the guts to say, tell me 3 places or 5 places where it didn't work out, and I want their phone numbers. I want to talk to them. The ones who are in your portfolio and are not that happy about it, or the ones that are no longer in your portfolio because they couldn't wait to get out from under your fingerprint. Yeah. So if you, and organizations that are offering you capital that are not willing to have that conversation, then you probably don't want to be with them.
Yes.
Because that's a reflection of their character, and guess what? Character counts.
So think of it like, it's so fascinating to me. So you have a company now, and you have a business owner, and as they're assessing private equity or they're assessing the need for capital, how should they look at private equity or getting a loan instead or finding a private loan? I mean, obviously, if you can get enough capital from a banking relationship, fine. Let's exclude that for a second, because that's what everybody could, should, or try to do or has done. And there's different loans there too. I'm not suggesting that an SBA loan from the bank is the same thing as a line of credit or an ABL line. But if you're going to bring on a partner and it's a non-bank partner, what are some of the differences they should look at with private equity, as you just articulated, but looking at a private lender or a partner, for example? Maybe it's a strategic partner. Maybe it's somebody they know. Maybe it's another business owner in their same space.
One of the cool things that's happened in finance over the last 15 years is this whole sector of the financial world called the non-bank banks, right? Non-bank banks, gosh, it sounds like such a simple concept, but it's basically organizations that are willing to lend capital, but don't have the same structural limitations, regulatory limitations, and maybe even return limitations that traditional bank lenders have. And so you're a non-bank bank. I'm a non-bank bank. We do things differently. We operate differently. We maybe even desire to invest in each other's businesses because of our different levels of expertise. But the non-bank bank world, and if you're a business owner who's listening to this, just Googles the phrase non-bank bank or asset-backed lender, or they will find hundreds of entities, even geographically convenient to them, that actually do this. And it could be, you mentioned a phrase earlier when you introduced me called family office. This whole idea of a family office, which basically is another $2 term for an individual who decided to set up an investment business around their own wealth. and maybe it's a single family office, or maybe it's a multifamily office because 5 families got together and decided to have one set of infrastructure instead of 5 sets of infrastructure. But family offices, single family offices, multifamily offices, asset-backed lenders, and other organizations that are looking for unique opportunities, and those opportunities may have to be ones where the business owner is willing to pay an above average rate for that capital. But they know the game, right? I have to pay an above average rate until I prove to the traditional lenders, the actual banks, that I'm worthy of going through their credit process and profile, and I now can, I'm now worthy of being lent capital at 6 or 7 or 8% as opposed to 12 or 14 or 16 or 18.
Right.
So there's plenty of capital out there. I said before, one of the cool things that's happened is the emergence of these non-bank banks. Another cool thing that's happened in the last 20 years is that we, despite all the problems and issues that we see in the news every day, we live in an amazing country that has positive population growth, positive GDP growth, positive wealth growth. Okay, we can talk about all day how that's stratified across different levels of the population, but America has become wealthier every year for the last 100 years. And so therefore, there is a lot of capital that needs to be redeployed to generate returns on that capital. And so we could all put it into treasuries at 2 or 3 or 4%, or we could look for opportunities that are better than that. So there's always organizations, entities, and families looking to put capital to work. So as a private business owner, you could raise capital from your friends and family, and that could be through equity or it could be through debt. And most people avoid debt because they're afraid that the business is too young for the debt, hasn't generated enough cash flow, and maybe they're correct. Maybe it is too young and there's not enough revenue generation to generate cash flow yet to service that debt. But they also know that when you borrow money, just like when you borrow money for your house, you're giving the keys to your front door to someone else. Mm-hmm. And if I don't perform, I'm going to lose my business. So again, I don't want to get too far off your question, but there's a lot of different non-traditional ways for business owners to borrow money. And if I were a small business manufacturer and was looking for growth capital, I would start off with, the phrase I just used, friends and family who are willing to take a small stake in my company, and are fans of mine and are rooting for me. And boy, wouldn't it be great if 1 or 2 of them were experts in something that could actually add to my business? Yeah. Maybe they're expert financially and they could go on my board and be head of my audit committee or something like that. But when you have a small business, obviously you look far and wide and you look through your Rolodex, so to speak. I don't know if it's a phrase that still is used. Is Rolodex still a phrase that gets used?
I think people might know what that looks like, or your contact list, otherwise known as.
You look through your contact list and you say, I know Joe, I know Dean, I know Scott, I know Kate. Who do they know that could be helpful to me? And it's actually a fun part of building a business when you start communicating your vision and your mission, and you get people who are willing to start to invest with you. And then that usually, like most things in life, leads to other things. Somebody says, well, have you thought about doing this? Have you thought about doing that? But always look for investors that bring something else to the table other than just cash, because they can help open doors for either commercially for your business or financially as you build your capital structure into the type of financing that you really want to have 2 and 3 and 4 years down the road.
So Dean, you've made in your business now, HarborLight, and I want to touch on maybe quickly the transition to how you made that exit out and into your own world. But while we're on this topic, I want to ask you this question. You make investments or have made investments in real estate assets, businesses that turn cash flow, could be construction, government, contractors. You've made some equity investments in some different spaces, all with different types of returns and analysis. And you have some favorites that you like to focus on now. But you have a broad experience in a lot of them. What are the things that you look for when you're trying to make the decision on who you're going to work with, who you're going to put hard-earned capital into, or your investors' capital into? What are the things that someone listening to now can say, you know what, I fit that criteria, or I'm not quite there yet, but I need to? What are those things?
Well, again, I don't mean to sound corny and repetitive, but the first thing I try to get an assessment is the quality of the people you're considering making investments with, right? So you and I met each other a couple years ago. but we both decided to make an investment. We invested what's called time, right? And we had lunch together, and we had breakfast together, and we played some golf together, and we got to know a little bit about each other. And then we walked outside the business lines, and we talked about our personal lives a little bit, and what our priorities are, and how we do our charitable giving, or how we deal with our churches, or what interests us as far as benefiting our families and what motivates us. And so my point is that we were able to make an assessment of each other based on character and the quality of what we thought was our non-business profile. And Scott, that's really what gave me comfort very quickly with you, because we have a lot in common and we're aligned on a lot of fronts. And we didn't orchestrate it. It just was how it was lined up to be. And so when I look to make investments, and by the way, we can make mistakes on that front, but you also have to make an evaluation as to whether you have that gift of discernment, meaning you have a track record in your past that shows that I have been good at this ability to discern that this is a person of good character, or my view of their character is one that over time has proven to be pretty accurate. Mm-hmm. So if you have a reasonably high level of confidence in that, you give yourself a B+ or better, you can proceed down that line like, okay, I think I'm dealing with a quality person whose yes is yes and their no is no. And I may not like everything they say, but if their yes is yes and their no is no, I can live with that as long as I'm dealing with an honest person. So, as a person who runs a family office, I try to make that assessment pretty quickly. I'm not rash about it, but I like to come to that conclusion within a few months of having met somebody. But I'm willing to invest the time to do that, and also ask for other relationships that can help me make that assessment. So that being said, you're right. I have an opportunity to invest in lots of different areas of the economy and industries that have grown well. And Scott, you see this scar here and the scar here and the scar here. Well, I've made enough mistakes in my investment business that, as my wife likes to say, most people, when they get hit over the head with a frying pan once, they kind of get told to move in a different direction. And I've seemed to take 2 or 3 times to do that, but I've been hit over the head 20 times in my career about making investment mistakes. I haven't made too many character assessment mistakes, but I've made some investment mistakes, because I'm an optimistic guy, and when I hear a good story about a young healthcare company or a young technology company or a young manufacturing company, I want to root for their success, and I want to help them be successful, only to realize most of the time I don't know what I didn't know, right? Mm-hmm. And so I've tried to migrate my investment strategy over the last 10 years to just more predictable revenue streams and more predictable business models. And if something as boring as real estate can provide double-digit annual returns, then sign me up, because I don't need to make 40% a year. But if I make for me and my fellow investors, 10, 11, 12, sometimes 13, 14, or 15% a year, I'm fine with that, especially if it's in a business I understand and with a management team that provides transparency. Mm-hmm. So that gets back to the character counts comment, right? So somebody who doesn't give you the transparency that they claim they're going to, or just resists the notion of even giving it to you, is somebody you should run pretty fast from. Yeah. So I've tried to simplify my investment strategy. I look for cash flow businesses that can pay their bills and pay our investors handsome returns on the money we lend to them, and business models that I can explain in a short elevator ride.
That you can understand.
Yes.
It's good. I think it's funny because I get asked that question a lot. I think there's a lot of mistakes that business owners make. You know your business really well. You want to say, just give me the money, I'm going to make this happen. And of course you're optimistic and you think it's all going to go, and you don't want to ask those questions, or you don't want to answer the questions. But I think there's a lot to learn, and I can speak for myself. There's a lot to learn when you go out to talk about your business. Sure. By answering the questions that other people ask you. Even though it may feel annoying, or sometimes you may even feel intrusive, like, what, are they doubting me? Right. The truth is, they're not really doubting. It's not about you. Right. It's if they're asking you questions, they actually probably are genuinely interested to some degree, and they're at least to the degree of the question they're asking, and you should explain that answer. And if you can and should take the time, you can actually learn more from that than they may even be learning, because what they're going to ask you around things that you probably aren't thinking about.
Right.
And
good point.
it's a cool thing to go through, but I think you make some good points. Like be the right character person, and in order to do that, you have to be authentic. A lot of people, I think they have to put on the show, and then walk into a presentation with a lender or an equity partner and show them what they think that person needs to see. And all that person sees is something weird. They don't understand. Like it doesn't feel authentic. And that is the biggest mistake I think a lot of people make when talking to lenders.
Right.
You should really just be you, whoever that is.
That's right.
And allow the lender, who has a lot of experience, because that's what they do, assess who you are. They're good at that. They have a process for that. And so I think that's the best takeaway to go from there, is just be you no matter what.
Yeah, and that takes humility, right? Which is another attribute in the whole assessment of character counts, right? I personally have learned the hard way through all these scars I have all over my life that a lack of humility will get you in serious trouble really fast.
Right.
And the more humility you show, especially if someone's interviewing you and thinking about making an investment in your company, if you tell them all the beautiful, glossy, wonderful things that have happened to you, then they're stuck sitting there asking a question that they need to ask and wish that you had volunteered instead of having to drag it out of you.
Yeah.
Like, tell me the horror stories, like what's gone wrong, where did your product not work, which are the first 5 people you realize you made mistakes hiring, which customer put you through the ringer and almost sent you into bankruptcy. Tell me all the iterations that you did, which financing went wrong that you shouldn't have done, which people did you bring on your board that were mistakes. Tell me it, because if I'm going to be a part owner of your business through an equity investment, or I'm going to be a lender who has the keys to your front door now, I better know all the goods and bads about you. And the faster you tell me that and I don't have to drag it out of you, the higher my grade of this relationship is going to be.
Yeah. I had a mentor of mine made this point, not quite in the same context, but it's his point. Andy Frisil is his name. And he said to me, or he said to us in a conversation, like, if you are going into a meeting and going to present yourself in the way that you think that person wants you to be, how arrogant of a person are you to actually think you would know what that person wants you to be, such that you're going to morph yourself into someone you're not to present that. And as soon as that correlation was made, I said to myself, you know what?
That's good.
If there's ever a reason to just be you, that's it by itself. Aside from anything else, like just that whole microcosm of that circus I just described is really like a great point. And I was like, you know what? From here on out, that's the easiest way to explain why you should do that. And the arrogance of thinking that you know what someone else wants to hear is just arrogant.
Yeah, it's taken me decades to learn it, but there are some eternal truths that actually are worth paying attention to, right? I mean, there's a biblical verse that says humility brings honor. It actually says humility precedes honor. So who doesn't want to be honored in their life, in your marriage, in your family, in your business, with your friends? Well, you want a formula for that? Humility precedes honor.
Yeah.
Okay, and the counter phrase of that in the very next proverb is, and pride precedes destruction.
That's right.
So you want to be prideful about all the wonderful things you've accomplished, and your list of accomplishments might be grand and long, but obviously everybody makes mistakes, and if you want to have a balanced presentation to somebody that's your audience, whether it's somebody you're trying to get to invest in your business or not, the humble approach, which shouldn't become an approach, it should be just part of our character, is, okay, let me tell you the balanced truth about how I've gotten where I've gotten and all the mistakes I've made that have helped me be better at what I do.
That's right. So you and I both have a very strong faith. It guides us. I know it guides a lot for you. You've been gracious enough to come in to our group here and even talk about some of the ways you assess charitable giving and the power of the things that and principles that we believe in our faith to drive you in business. And our audience knows where I stand on our faith, and I talk about it all the time. But one of the things I wanted you to share with folks now is it's hard to decide who to give to, when to give. Do you just write a check, or do you give time and effort and treasures? And you had such a good way of articulating that to our group 2 years ago, to the point where it's still talked about now. And with the amount of new people we have here too, it's probably worth maybe even coming back to talk about again. But can you give an assessment of how should someone be charitable with their time, treasure, and money? When, and how do they make the decision to do that? And is it even a part of business, or is this just personal? What's your opinion on that?
Yeah, that's a really, really good topic, because you could talk about this for a long time about a lot of different fronts. But for me, Scott, it started off with a simple phrase. Okay, when you're thankful, who do you thank? So let's start off with: are you thankful? Are you thankful, Scott?
Yeah.
I mean, you can list 100 things you're thankful for, right? Your good health, your beautiful family, your wife, your great business, your employees, your, on and on and on. The upbringing you had, the school you went to, the education you received. I mean, there's 100 things a day we could be thankful for. So who do you thank when you're thankful?
Yeah.
Do you thank yourself for being so assertive and wonderful and insightful? Do you thank your mom and dad? Maybe you do. You thank your wife. You thank your employees for working hard and helping you run a great business. When I started thinking about the gifts that I've been given, my natural gifts that I did not ask for in my mother's womb, I just somehow received certain gifts that allowed me to proliferate a pretty decent career. I just started thanking God for planting those gifts in me. I don't know where that came from, other than the fact that His gracious hand of provision allowed me to be talented in certain areas. I wish I were 6'3" and a left-handed pitcher for the New York Yankees, but I'm not. I'm 5'10" and I have this skill set, and this is what I do. But I have these gifts, so who do I thank? Thank you for this. Now, what do I do with this? How do I show thanks for this? And so, what do I do with my life? What do I do with the rewards, the tangible rewards of my life, my financial rewards? And I look back on the generosity of other people, the financial generosity of other people in my life, like the person I mentioned earlier in this podcast, right, about Jack Bogle, who donated. At that point, it was like $60,000 a year to allow me to go to school that cost $15,000 a year, which was about 50% of what my parents were making at the time.
Yeah.
Neither of my parents made more than $30,000 a year. So I started investing in education and providing a scholarship to other people. And I was like, that's a good way I could show thanks and give back. And then from there, I started thinking about other principles of giving. And so I started with education. And then I learned about the biblical concept of tithing, which is, all of this stuff we actually have, all this stuff I'm thankful for, this life that I've been given, okay, it all belongs to God, okay? So if you start with the premise that I'm on this earth for hopefully at least 70 or 80 years, and there's this thing called eternity, and in the meantime, my contribution to this 70 or 80 years on this world better be more than that which I've taken away. I want to give back more. So if it all belongs to Him eventually, and I leave this earth with exactly what I came into this earth with, which is nothing, then what do I want to do with that treasure, that time, and that talent, like you said, in the meantime? And so I started becoming more intentional about reinvesting that which I've been given and the rewards of that. And do I want to someday leave my kids enough money to buy a house? Yeah, that would be great. And do I want to ruin their lives by leaving them too much money? I definitely don't want to do that. So in the meantime, why don't I start paying attention to this biblical concept of tithing and giving away 10%? Because if all of it came from the generosity of our Creator, and I'm only being asked to give back 10% of it, and I could live on 90% of it, wouldn't that be cool? So guess what? I started tithing and putting 10% of my income into a bucket every month, every quarter, every year. And from that bucket, I started giving it away. And it became fun, Scott. I can't tell you, it became actually exciting, because once you give it away, once you put it in that bucket that you're saying, that's not mine anymore, I'm giving that back, then the fun part becomes, how do I put holes in that bucket and start letting it spit out on other organizations? Who do I want to bless? Is it educational organizations? Is it churches? Is it social organizations? Whatever is on my heart. And so that got me into the analysis of, okay, so eventually I woke up one day and I'm giving away to 50 organizations, okay, and then it started getting unwieldy, and I realized, okay, this has gotten way too unorganized. So I started thinking about the themes that are really burdening my heart. So I mentioned education already, right? But there's other things, like there's homelessness that really bothers me, and there's a mentorship void in our country for people who haven't had the good fortune that I had to win a scholarship and go to a private high school and a quote unquote fancy university. So how can I help people become mentors and receive mentors, and help people help guide young people who are in middle school and high school to making better decisions so they can get an education, or at least get a career track or a military track, and start making choices and decisions that a lot of urban kids don't get visibility to. And so I started thinking globally about the big issues that really touch my heart and acting locally. Because for a time I started giving globally to organizations that are helping people in Africa and Southeast Asia and South America. And that was great. And I even went to some of those places and saw where the quote unquote the capital that we were allocating is going to work. And it made me feel, really blessed to be able to be part of it. But then I looked around the city I live in, and a lot of those same problems exist right here. So this is where I live. This is where I planted my life. This is where my beautiful children live. This is where I want to invest most of my charitable giving. It doesn't mean I still don't give to places far away, but a lot less of it than I used to. So thinking about global issues, acting on them in a local way that impacts the community in which we live, and there's no shortage of opportunities.
Yeah.
The other thing I did, Scott, is I started, I told you about that 10% in that bucket. Somebody challenged me to think about maybe that bucket should be 20%. And at some point in your life, you stop raising your standard of living and you think about raising your standard of giving. And that is really exciting, because we all have more stuff than we think we need. And at some point, some standard of living that you do have, it's plenty, right? I can't drive 2 cars at once. I don't need 2 cars, although it maybe would be nice to have a couple of different cars if that's your thing. And our family goes on great vacations, a couple times a year. And so could I go on nicer vacations? I guess, but the ones I go on are pretty darn nice. I don't really need to raise my standard of giving. But every time I raise my standard of giving instead of my standard of living, my joy factor goes up multiples.
Yeah.
To see, you mentioned Elevate at the beginning of your introduction. I got involved in this organization called Elevate. To see Elevate provide teacher mentors to these inner city kids who are flourishing because somebody's showing attention and care and love to them at a time in their lives where they're not getting a lot of it because of their circumstances, which most of the time have nothing to do with their own behaviors and own actions. And so to see the growth in these urban kids in Tampa high schools is really cool, and to see how their eyes have gotten wide open. And a lot of these kids already in less than a year, they want to become teachers now because they've seen what a teacher mentor that's focused on doing just that, mentoring, they see the impact it could have because it's happening in their lives. And at 16 and 17 and 18 years old, you're seeing people make lifetime choices that are going to change the trajectory to the better for their lives. And so that's why when that tithing bucket goes from 10% to 20%, I'm working on trying to get to 30% this year. And you don't need to be quote unquote rich to do it. You don't need to make a lot of money to do it. You can make $8 an hour and still give 10% of it away. Because this is what I've learned. This treasure principle, you and I have discussed it a little bit. Once you start giving, not only does it become fun and contagious, you can't control the back end of that, which is blessing that shows up in your life in ways that you can't fathom. Not just financial blessings, but personal blessings, relationship blessings, blessings with the neighbors. So, Scott, the more I tithe, the more I give, the faster my business has grown, the better my marriage has been, the better my kids are doing. I can't explain it other than the goodness of God that comes from being obedient to the concept of tithing. And so if you just get started with $5 a month, you would be surprised. It's not the amount, it's the heart.
There was a great quote I heard by a guy named Dean Graciosi. And he said, people always say money can't buy happiness. And the people that say that have never given enough away. And it was really cool, and it changed the framework of that. Another phrase around giving came from another gentleman, a mentor of mine named Ed Milet, and he said, he's taught us this principle that God will give you these blessings. He's a faithful person as well, and he says, in order to pass to you, it has to pass through you. You cannot be a reservoir and be a giving person and expect things to come in return. If you are a stopping point, a plug, how could you ever expect the circle of what you need to come back to you? So as it comes to you, it has to be passed through you. And that is just another great principle that just ultimately just clicks, and sometimes there's these little phrases, these little things you hear someone say, the way you just shared that can like unlock these secrets. Right. And then you have to have faith that your blessings will come back around, and that's just the truth. I mean, I wish I knew it longer. Maybe you're not supposed to know it sooner in
Probably
life.
not.
You learn it in your 40s. I was like, oh gosh, I wish I did. But I can tell you that I share it here with our team, who I might be the oldest person in here. Probably, I think I am. And I try to share that to them, just in the case, like, because some things I heard only need to hear once. I was just like, gosh, I wish I heard it from someone else sooner, but I didn't, And so if that's for the people that only need to hear it from someone one time, and you can be 25 or 30, and like, what a blessing. And so that's why I asked you that question. That's why I want you to talk about that. I hope the folks that are listening to this can grasp that for who does.
Sometimes you just got to get started. Just try it out. See how it works. And that's why I said, even with $5, you can be generous, and it unlocks a lot in your life. And there's another phrase that I've gotten stuck on over the last 20 years, which is blessed to be a blessing. Right? I'm blessed to be a blessing. So if I'm being blessed, I could keep all this in my own bucket if I want to, but if I become a vessel, like you said, that's pouring it out on others, and then all of a sudden that bucket starts to grow, because I believe that principle gets honored in the heavenly realm in ways that we can't fathom. That's the magnitude of that blessing. Yeah,
and whether you believe that or not, or you're just hearing this and you're like, you know what, I'm going to do this for selfish reasons. These guys said God will bless me, or I'm going to get something if I give something. If you do it just for that, and you have to learn where and why it works on the back end. That's okay too. Just let that motivate you, and don't feel bad about it if that's the case.
Get started.
Yeah, just do it. But it is literally almost impossible, and I say that very, very specifically. Literally almost impossible, if not impossible, to give money to help someone and feel bad about yourself. It literally, I don't think it's possible. I just don't. And as hard as it is to actually go do it, sometimes it'd be like this anxiety over whether you should, or I'm parting with it, or I might need it later, and all those thoughts. Yeah. When you do it, it's almost impossible to feel unhappy.
When my kids were young, I used to take them on Wednesday mornings to breakfast before I drop them off at school on Wednesdays, and we'd go to a different breakfast place, rotate around 3 or 4 places, and it became a game. So on 2 Wednesdays a month, my oldest daughter got to pick which people we were going to treat to breakfast at the same place, and my other daughter got to pick on the other 2 days. And they would look around the restaurant, or they'd look around in the Starbucks line, or Panera Bread, or wherever, and say, "Okay, let's go over there and tell that lady we're going to buy her coffee." And then, of course, they got these crazy reactions, like, "You're doing what?" And no, you don't need to do that. No, actually, we need to do that. My father said we need to do this, so we're doing this. We're buying your coffee today. And people resisted. They would just say, "Hey, why don't you just pass it along to somebody else today?" So when you see somebody at lunch today, maybe you buy them a $5 sandwich or a $2 coffee, and you just start that contagious movement. And but I've been fortunate, despite a lot of mistakes I've made in my life. I've been really fortunate, and to learn the giving thing at a relatively early age, in my early 30s, allowed me. And by the way, I was terrible at it in the beginning, because I would do it with, and maybe I'm giving too much. I'd be fearful. But you try your hardest to just pursue it if it's something that's on your heart to do. And I learned. I didn't start off tithing 10%. I started off maybe tithing 3% or 5%, and then eventually you learn, okay, I can do this. And as I said, the blessings that come from, I think, that type of obedience end up giving you plenty of opportunity to expand your agenda.
I agree. So I could talk to you all day about a lot of these things, but at some point we're going to wrap this up. And so before we do, there's 3 questions I want to ask you. We call it sort of our little rapid fire question round. Okay. And so I think you'll be great at these. So I'll ask you the question, and you give me your first initial quick response. All right?
Okay.
What's the best advice you've received?
I kind of said it already. That humility comes before honor, because I made a lot of mistakes before I learned that principle. And when I learned that principle, I've gotten a hit in the head with a frying pan a few less times.
Yeah.
So it really is an important principle.
It is. What's your favorite business-related book?
The book that really kind of changed the trajectory of my business, at least initially, was called Good to Great.
Yeah.
It's such a great book that plays to my spirit, which is not to tolerate mediocrity or just being good. If you want to be excellent at something, then pursue it, because Collins in that book has a lot of Fortune 500 companies he talks about, and the ones who were truly great were not satisfied by good. In fact, good was the enemy of great. When good is good enough, then when somebody's playing for a B or a B plus, you need to cut them out of your company. Okay, we are an A plus company. In fact, A's or an A minuses are no longer acceptable at some point. So it just changed my perspective on what is acceptable, especially if you feel like you have an advantage in your business and you have a value added. Then guess what? We're going to be great at everything we do, even if it means walking away from business.
Yeah, it's a mandatory requirement, I think, for any business owner or leader of a business in a section of a business on a team. Mm-hmm. It's really something that is going to help you in that role so tremendously. Yeah. I agree. All right, last question. What's the most underrated skill in your industry?
I think, well, these themes are probably going to blend together, but the most underrated skill is admitting what you don't know. Being able to say to somebody, I'm the CEO of my little business, right? I go into meetings and people think I'm going to have the answers all the time. And I always point at other people around the table. I say, you know more about this than I do. You know more about this part of this than I did, and you know more. So tell me about what your recommendation would be and what action plan you would put in place. And having the courage and sometimes the humility to ask other people for answers, because sometimes your answer is a synthesis of all the other answers, but you have to have the humility to ask others. Mm-hmm. And so listening, which I'm not good at, my wife reminds me of that all the time, and having the humility to hear others' inputs before you synthesize an answer or a solution is really critical.
Well, I think you the way you said that is awesome. I agree with you too, and I've heard a phrase before, knowledge is what you know and wisdom is what you don't.
There you go.
And knowing what you don't know is very wise, and that wisdom is what's going to dictate more success in your life than the knowledge that you have, for sure. So I think those are three great ones. Well, Dean, man, this has been awesome. I appreciate you giving us this information and insights. I know for sure people have heard some things here today, some nuggets they can use and influence, and I'm just really grateful for you taking the time to do it. Thank you.
Well, I'm grateful for our friendship, and I'm honored that you had me here today, and thank you for taking the time.
Well, I think everybody knows why I had you on. All right, till next time.
Thanks, man.
Thanks, bro.
Appreciate it.
Everybody, thank you very much for taking the time to listen to this. I hope you guys found some enjoyment. I hope you took some of these nuggets, some of these pieces to heart. I hope it impacts you. Take them, put them back, implement it in your business. If you found any value in this at all, please click share, subscribe, share it with a friend, share it with someone you know. And until next time, God bless you. Have a great week.